Hey there, and welcome back to Stock Market Weekly, your 20-minute show catching up on all of the notable moves across financial markets. I'm your host, Evan Medeiros, and we publish these shows every Friday, so make sure you are subscribed to the channel and tune back in on the weekends to get yourself prepped for the week ahead. Boy, it was a bounce out there. Stocks rallied hard this week. It was the best performing week for equities since the election results, since November, about 2.5, 3 months ago. And really what fueled that rally or gave the excuse for the markets to finally bounce was some of that early inflation data that we got earlier in the week. We had PPI, we had CPI numbers coming in, I guess better than expected, whatever that really means. But markets essentially using it as an excuse to rally. The pressure came off stocks with interest rates finally reversing pretty hard on Wednesday's data, and that really sort of sparked this nice reflexive bounce up. We were oversold. We talked about some of these factors last week, basically, looking for the bounce this week. The title of last week's episode was Capitulate or Bounce. Both of those things kind of mean the same thing. So we really got that excuse earlier in the week for stocks to rally. It was a nice snapback to see. Bitcoin on the verge of a breakout right now as well. So really being one of the big beneficiaries to rates coming down. We've got the Trump administration coming in fully locked and loaded next week. Markets are closed on Monday for Martin Luther King Jr. So we are going to get the new Trump administration basically sworn in and kicking things off on Monday while markets are closed. So that's going to be an interesting open for Tuesday. And we have earnings season, which is now kind of, starting to heat up a little bit. We don't quite have the big mega cap tech heavy weights. That's another 2 weeks away. I believe we have Netflix. I believe Tesla is next week as well. So things are going to start to heat up here into earnings season. So we have plenty to talk about. Before we do, don't forget to support the show by supporting our sponsor, Investors Business Daily. We've got links below here. They've got two great products, Market Surge Charts and their IBD digital subscription. We've got referral links, discount links to both of those products. Check them out in the description of this show. And now let's get into it. All right, we are back. Wharton TC2000, that is the platform we're using throughout this video. It's what you see loaded up right now. If you're looking for a new platform, check out the referral link to Wharton TC2000 in the description of this show. It's a platform we support ourselves here at thetraderist.com. All the cool indicators, layouts, dashboards, things you're seeing throughout this video, mostly all available on our website. You can check it out there and get it for yourself. Now, let's get into the numbers here. Take a look at this, 3 to 4% higher across all of the major US averages. Like we talked about at the top of the show, best week in 2.5 months or so for the stock market. We also saw volatility coming out of this market. You can see the VIX drop 3.5 points, below 16 now going into the long weekend. It's a pretty comfortable level given it's a long weekend with an inauguration, with executive orders all coming fast and furious here. So a little bit of, I wouldn't say it's complacency, but it's certainly a notch down from what we've been experiencing. If we take a look here at sectors, you can see now energy at the top of the list again. This is the clear standout winner. It came out of the gate swinging this year, and it's up against 6.3%. Financials were right on its heels. Financials did start to report their earnings. So we had the big mega money center mega cap financials report earnings this week, so helping fuel a little bit of the charge there. And materials also up 6% this week. If we take a look at our sector trends, so this is one of the indicators we have built for TC2000. It's also available for TradingView, but it's a smart trend filter is what we call it. It's measuring price and volume spanning across time, along with some price action relationships. And you are seeing this week now, you are getting a couple of fresh buy signals moving back up here on the daily time frame, notably in financials, notably in industrials and materials. Also healthcare, you can see starting to upswing, and utilities. Okay, those didn't see those last two on the bottom. So we have a lot more sort of repair happening here. And you can see a lot of the other red dots moving to yellow dots. So you're starting to get a little bit of floor of support now being shown across some of these sectors. We were in a pretty tough breadth environment. We're going to look at that here in just a second now in terms of market breadth. We like to look at 52-week highs, 52-week lows, and you can see here that, well, we're getting a little bit of an uptick here in the number of stocks hitting 52-week highs, but it's still pretty baby right now. It's not doing a whole lot. It's starting to increase a smidge. That's encouraging. If we take a look at the number of stocks hitting 52-week lows, well, it is also encouraging that you're starting to see that ratio just kind of flatline basically on both sides. And so what that's, telling us right now is there's an attempt here, right? There's an attempt of a changing of the guard. What I want to see in this market, though, is a lot more stocks hitting this 52-week high list, right? I want to see these levels like we were back in November, back in October, back in September. I want to see readings of 600, 800, 500 plus new 52-week highs being made on a daily basis. We're nowhere near that right now. These things take time. These transitions take time. But that's really what I want to see to gain more confidence in this market. If this low is the low, if we just went through a 5% pullback and the low is in for the foreseeable future, then I want to see this start to expand. I don't have enough evidence as it stands right now. If we take a look here at our dollar and 10-year treasury yields, you can see that both of these markets trying to make the corner down, trying to top out a little bit here. We did see a nice kind of knee-jerk reaction lower post that inflation data in the 10-year treasury yield. I think that is the big story right now. I think the 10-year is basically something all traders need to have on their charts and watch lists right now, and that is going to be really the elephant in the room, I think, for the next couple of months as this market chews on what the Fed might be doing and what interest rates are looking like. We talked about, the dollar was a little bit weak this week, but again, not tremendous. But we'd love to see these things really start to roll over. They're pretty much going to go hand in hand with the 10-year treasury is doing and the dollar index. If we take a look at commodities here, another blockbuster week for commodities. Commodities have been off to a strong start this week. Bitcoin's at the top of the list here, up 10.74%. We're going to talk about that in just a little bit. All right, so let's get into some price action here. Let's start it off with the S&P 500, and you can see what a difference a week makes. This is the weekly chart now of the S&P 500. It's 3%, basically 3% up. Uptick in volume, and you have a bullish engulfing weekly bar that basically got printed here, kind of engulfing the last 3 weeks of trading action. So if we go down to the daily chart here and we take a look at this, you can see that we did on Monday finally fill entirely this gap back here from the election. So this was the post-election. We got the results in. There was a definitive winner. There was no sort of delay or wait or count we had to go through, and the markets reacted pretty strongly that following day on Wednesday, gapping up 2.5%. Well, we finally got back here and we filled that gap. You can see that the market opened pretty much at the lows on Monday and then proceeded to rally throughout the session. We sort of talked about this scenario last week. We were looking for basically, I was calling for, a 2% capitulation down open on Monday to really sort of kind of put in a low here in this market. It wasn't quite 2%, but it was, about 1% or so gap down. And that proved to be enough of kind of a churning there of traders and sentiment to really sort of wash us out and put in a nice durable kind of short-term low that launched us off to higher and higher and higher days throughout the week. We had a big gap up on the, again, inflation data on Wednesday. It was kind of a gap and go session. And then we had another strong close to finish out the week. So when I look here at the S&P 500, I would say that we're in a very tough spot here in the short term. This is a very difficult spot to really, forecast any direction with some absolute clarity right now. We certainly have some short-term momentum to the upside, and maybe that squeeze, that momentum, right, that excitement can still continue here in the short term. But now that we're coming back into this cluster of highs back here from late December, early January, also some supply overhead from late December when we broke down. This gets a little bit messier for me in the short term. We've worked off those oversold conditions. Now I think it's going to be a slog through what the Trump administration is really going to put forth in these first several weeks, and how they're going to start talking to the market. We know President Trump likes to sort of use the stock market as a scoreboard, and sort of dictates a lot of rhetoric on what he loves to see. And it'll be interesting to see his dynamic with Jerome Powell and the Fed, and the way interest rates are right now, and trying to get them to ease a little bit quicker. I think there's lots of interesting dynamics we need to see play itself out. The weekly chart in isolation, I mean, this is a nice bullish engulfing, kind of bar that got put in here for the SPY, but in the short term, I would say it's just a very kind of tricky spot. I want to see breadth continue. I want to see more stocks hitting 52-week highs. I want to see the 10-year Treasury yield continue to remain sort of heavy here. I want to see it off of its highs. So for me, I think there's more proof I need to see to get really excited about the market in the short term. And until and if we start to clear some of these highs and we start to get breadth to improve, I'm going to be a little bit reluctant here. I want to see the market back over 602. If we can start doing that with some authority and closing above it, I think you got to at least, give the benefit of the doubt to the buyers here that this breakout, could start to get into motion. But for me, it's kind of wait and see mode. We got the nice washout. We got the bounce. Now let's let some of the dust settle here. If we take a look at the Nasdaq 100, you can see we're kind of still in this pattern here. We're kind of still in this little stair step, lower highs and lower lows, and this sort of general broad flag and channel. Now this could again resolve in a very constructive multi-week, multi-month consolidation, and we could in fact start to expand higher. But we're very likely going to need to see, again, some earnings support here as well. We're in the midst of earnings season, so the market feels like, it's in just kind of a wait and see mode here between the new Trump administration, earnings season. Let's see how, we get those catalysts through and how the market responds to it. For now, I do like the fact that we held above 503. I do like the fact that we bounced pretty strongly here. Now let's see how we grapple with some of this prior overhead supply. Russell 2000, I mean, it was the exact, I don't want to say prediction, because we don't predict. We just keep an open mind on the paths that the market can take. But we talked exactly about this last week, of a weak open on Monday, a close up, and then a springboard back over this support here. A nice little failed breakdown that would get us a move back up. And we got that to the T. And that was, exciting. That was good. That was a nice to see in the short term. Now the hard work starts as we come back into this 225 zone. Need to see more proof here. We're up 5 days in a row. We're at some supply and some overhead resistance. Let's see how the market handles that on Tuesday in this very short week of trading. So that's kind of the landscape there. Short term, it's a messy picture. We're going to look at our trading systems, how they're positioned, and that sort of illustrates too sort of my sentiments on how we're positioned and how we've been trading this week and this bounce. So that's the broad market. If we take a look here at some commodities, if we look at oil, this is now up 4 weeks in a row. You can see we did kind of tail off a little bit here, but we're certainly stretched. Energy's been off to a good start. Nice, kind of leadership group, and getting some sector rotation there is very nice to see. The chase is certainly on. It's a little bit extended in the short term. Would love to see this kind of just settle in a little bit, pull back, consolidate sideways, set us up for potentially another future second leg up. Would be a perfect scenario there for energy. Right now, let's just keep an eye on it. You can see high yield credit, corporate bonds also doing well this week, up 1.18%. You can see kind of another bullish engulfing bar. Good to see that, again, some of the stress out there and some of the interest rate dynamics that we've had, that pressure, sort of alleviating itself. This is the 10-year Treasury bond, IEF. You can see again, 4 days up. It's still got a downtrend here for sure, right? Over the last 4 months, it's been nothing but lower here. Lots of trend momentum to the downside. This is the inverse of Treasury yields on the 10-year. So you want to see this continue to hold up here. We don't want to see this roll right back over. We don't want to see this heading back down to these lows. This is something, again, that I'm going to be paying close attention to. I think this is driving a lot of this near-term narrative. We also have earnings season, which we're going to, start to get some company, projections and profitability. But I think the 10-year is still kind of the elephant in the room right now, along with the TLT. You could use this as well on the long bond in terms of a proxy, but IEF is really what I'd be queuing off of at this time. If we take a look at Bitcoin here, so a great week for Bitcoin. Not quite getting the full breakout here, but certainly clearing through some resistance. Take a look at this very textbook sort of technical washout here, right to start in the week, right with the gap down in equities as a whole. We also saw Bitcoin sort of wick underneath 90K. We got a brief trade down here, got a 20 minutes, an hour of trading below $90,000. We saw dip buyers come in, really sort of just ran some stops. There was no further selling pressure. We reversed, and then we just were basically up only for the rest of the week. If we take a look at the IBIT here, you can see again, same sort of scenario. We basically got down to about $50 and change, and then we ended the week almost at 60. Take a look at the weekly chart of IBIT here. This again, talk about a bullish engulfing week. We basically got a bullish engulfing week over the last, 8 or 9 or 10 weeks for IBIT. So lots of excitement here. Nice springboard up. We've been consolidating for some time now. We're overbought in the short term, but this is, what Bitcoin does when it is making its breakout moves. It's going to force everyone to chase in a rush, and that momentum, begets more momentum, and that rally ensues. So I like the technical picture here. Still am long Bitcoin. Our Galahad trading system's been long, basically, since the ETF released. I mean, we've nearly been long this market. We got chopped up a little bit in this big range from last year, but generally speaking, we're still long here and looking for higher prices. President Trump, of course, now has lots of potential executive orders that relate to Bitcoin, and we're going to see what that looks like on, probably right away on Monday night into Tuesday. And we'll see what kind of executive orders get passed here. But Bitcoin looks good. Have a position, looking for higher prices. So that is kind of everything on the big major markets. I did want to look at the Mag 7 stocks, and then we'll take a quick look at our trading this week. So if we take a look here at Mag 7, we called out Tesla last week as being, a interesting trade opportunity, the way it was kind of putting in that higher low. Talked about potentially focusing on that for the long trade. That, pretty much blew away all of the other Mag 7 performers this week. So Tesla was certainly the spot to be paying attention to this week. And when I look into, sort of next week here, Google is certainly looking good, especially for a bit of a swing trade here. If you're a longer term swing trader, the technical picture in Google is looking awfully nice right now, the way it's consolidating at highs. If we zoom out here, nice technical kind of trend up and consolidating right underneath those highs. So Google looking pretty nice there. Break over $200 looks like it's go time. And I gotta say, Apple is looking pretty terrible right now with this price action and the way it has now lost its prior July highs. There's definitely a big seller in here, or there is some structural weakness that is making itself known. It's kind of diverging and really being weak now. It started off weak for Mag 7, and now it's kind of staying weak. So there's something going on here. Don't like the price action. It's a little bit oversold in the short term, and maybe there's no big correction in Apple per se, but it's certainly looking and feeling a little bit different in compared to some of the other Mag 7. So that's all I've got on the majors. Let's take a look at some of the trading that we did this week. with our trading systems. So 3 trading systems, Lamerick, Merlin, and Galahad. Take a look at our trading trades throughout the week. We had 4 buys, 13 sells, all on our short-term trading system. So it was basically out there doing lots of trading throughout this fast trading week. None of our long-term system, our medium-term system didn't do anything this week. So 13 sells, 4 buys. This is the exposure as we go into the weekend, long weekend here. You can see that our Lamerick system now is basically flat. It's got a little bit of long position. It's got 1 long on, one short on. So it's basically net neutral in the short term. These systems run without my judgment. Obviously, I built them, but they are fully rules-based trading systems. And this sort of, really kind of shows how I feel about this market as well. The short term feels hard right now on what direction we're going to tip. Our medium-term system still 72% long, and our long-term system is 117% long, right? And so this is basically showing you that in the short term, it's a tough decision, tough road. Medium term, you still got some trends that are working, still got some stocks that are generally in uptrends. And then the long-term system just, hey, it doesn't bother us. Things are still looking good from that long-term perspective. So this is a way to, again, manage exposure, drive exposure based on time frames, based on rules-based trading systems. Here's our results for the week. So basically each day here, we've got our returns, the S&P 500 returns, our trading systems. We're up 3.61% this week versus the S&P 500 at 2.95%. So a little bit of relative outperformance. Of course, we've got our trading reports, trials, and all kinds of fun stuff for you if you're interested in learning more. So that is all I got this week. Busy week out there, nice bounce. Let's see if it can continue. Let's see how this new administration treats the market and what they come out with for our short week ahead. Hopefully everybody's doing well out there. Thanks as always for tuning in every Friday. Check back in on the weekends. Make sure you are subscribed to the channel. And don't forget, we got links in the description of the show for our sponsor, for TZ2000, for our trading systems. Take care. We'll see you back here next episode.